Hi there, I'm Champion Trader Kevin Davey, and today I'm going to talk about an algo trading technique that uses something I call a kill switch. And what it can do is turn this kind of strategy into this kind of strategy. What is it? How does it work? Well, let's get started. Before we get started, if you haven't signed up for my free algo strategy, now's the time to do so. Hit the QR code or enter the link you see at the bottom, or in the description, you'll find a link. Sign up, you'll get this free algo and lots of other great information. Okay, so today I'm going to talk to you about a kill switch. And what is it? Well, think of it this way. If volatility is really high, there's a lot of uncertainty in the market. Sometimes it's better just to go to the sidelines and just not trade, okay? And what that would entail is you code a kill switch in your strategy. So for example, you could turn off signals when the volatility is high. Now you could also do this to turn off signals when the volatility is low if you'd rather do that. But for this, I'm just going to turn off the signals when the volatility is high. And the theory behind it is when the markets go crazy, when they're going up and down and all over the place, you just go on the sidelines and you just hold on to your money, let things kind of shake out, and when things get back to more normal volatility, then you start taking signals again. So what it can do is it really can help you in kind of troubling times that you're not putting your capital at risk. And I want to thank my student, Strategy Factory student Stacy, for suggesting this, and that kind of led me to create this. Okay, so the code is pretty simple. This is TradeStation, but I have highlighted the code for the kill switch in red. So the red boxes. So what I have is I have a buy rule and a sell rule. Those don't matter for this demonstration. But what I have is basically an if block that contains those buy-sell rules. And what the if block says, if the average true range of the last 14 bars is less than the average over the last 250 bars, so if this was daily bars, think of it as a year's worth of volatility, the average volatility over the past year. If it was less, the current average true range was less than that, then you can take trades. So it's saying anytime your volatility gets too high, then you want to turn it off. And there's a couple parameters here. One, I have 1 times the average. You could use any value you wanted. You could do double the average, triple it, half the average. 250 bars back, maybe you do 50 bars back, which would be a couple months of daily bars. Whatever you want. I just show that as an example. But you get the idea. What it does is that code will prevent you from making trades if the volatility is too high. And again, if you wanted it when the volatility is too low, you could make this a greater than symbol. So there's a lot of variations you can play with this. So here's that sample strategy. And I just looked at the last 5 or 6 years here. And I turned what was a losing strategy over that period with some big losing years, you can see on the left, to a winning strategy. So it trades a lot less, and what it does is it just stays on the sidelines when the volatility is high. Pretty neat. And one of the reasons that people might be interested in this right now, when this video is coming out in spring of 2025, is because the first few months of 2025 have been crazy with volatility. And when you look at something like the mini S&P going up and down and up and down, maybe it's better just to stay on the sidelines. I hope you're enjoying this video. Don't forget, if you haven't signed up already, you can get this free algo strategy just for signing up for my email list. Hit the QR code or the link at the bottom. So here's what it's done since October 2024 to mid-April 2025. Before, that's without the switch, minus $41,000 per contract. And then when you did it with the switch, it goes down to about minus 7,000. So it improved your performance a whole lot. Now, it was still negative, but it was nowhere nearly as bad as it was before without the volatility switch. And again, this is just one example strategy. The point is, I just wanted to show you how this would work and give you an example of, hey, it did make things better. Pretty neat. Now, if you want to implement this on your own, there's a few little twists to it, a few little caveats that you don't want to just immediately go and do it. For example, I think it would be a terrible practice to take an existing strategy that has already done poorly over the last few months and now slap this kill switch on it. And if it worked better, you use it. And if it didn't, you say, oh, I forget, I tested it, and go back to your original version. That's just optimizing for perfection. You're trying to improve that back test. Not a good way to go, okay? So I would label that as pretty bad, in the red zone of this red to green. Terrible practice. Something better, you could say, okay, well, I'm going to test this and I'm going to use it whether it works or not. I'm just going to go with it. At least then you're not optimizing for the better result, and you're only giving yourself one chance. What a lot of people do is they'll try a kill switch. It won't work right. So they'll try optimizing the length or the multiplication factor, that kind of thing. And that's not good. That goes back to the terrible. So something better, at least, is just a one-shot deal. It either works or it doesn't. Okay? But the best way, if you want to incorporate kill switches into your strategies, is when you start developing the strategy, just have that kill switch in there. And that's just part of the strategy from day one, from the beginning of development. And then if your strategy works and passes all your tests, well, now you've got this kill switch built in too. That's great. That's the best of both worlds. And doing it that way really prevents you from cherry picking. Do I want it? Do I not want it? What do I test? Because if your test process is robust, you've already included it right from the beginning. So that's the way I would do it on any strategies that you build from this point forward. If you want a kill switch, just build it in right from the beginning. All right, so that's a pretty neat little tool, pretty neat little thing you can use on your own. If you are serious about algo trading, this is just one example of things you should be doing and things you should be thinking about, taking the time to try different things, to learn new things, and learn how to do things the right way. And I've kind of explained how I would do it the right way and how I would do it the wrong way. So keep that in mind. And speaking of the right way, follow a process when you build your strategies. This is my process. It works. It works for students who work with me. It's a robust, objective process. I highly encourage you to build strategies with something that is a repeatable process, and this is an example of that. All right, well, I hope you enjoyed the video. Leave a comment. Let me know what you do. Subscribe to the channel. Give a thumbs up. I'd appreciate it. All right, I'm Kevin Davey. Have a great day.